Hi everybody, it's Mark Boardman speaking. It's approaching 5:30 PM UK time on Wednesday the 26th of September. My trading room closed about an hour and a half ago, and I just want to talk you through something about my new FX trend rider strategy. You would need really to come into my trading room to get to fully understand this strategy, but I just want to show you the 4 trades that as I was leaving the trading room I said to everyone in the room, these are the trades that may play out. One I took just as we were in the room, which was here. This is the Kiwi dollar versus the Swiss franc, as you can see, long here. I'll talk you through that in a second, but I just want to go through the way first of all I use this strategy. So the FX trend rider strategy is not the same as the FX trend catcher strategy. For those of you that have been in the trading room, you'll know that I've used an FX trend catcher strategy for over a year now, and that's looking for these overextended currency patterns here at the top and at the bottom. With trend rider, we simply look for the currencies, which are represented by these coloured lines, to be heading in a steep incline or decline. So if you look here, we had the white line heading south quite steeply and the dark blue line heading north quite steeply. That was the Kiwi versus the Swiss franc. That's what caused me to look at this trade here. Now, what we do with the FX trend rider strategy is we wait for the market. We always miss the beginning of these trends, because that's why the fat man is heading in steep directions. Okay, so it's as opposed to the trend catcher strategy, where we try and get in right at the beginning of a trend, such as with this Australian red line here coming south. With the trend rider strategy, we recognize that the trend has started already, and that's good, because what we want the trend to do is begin and then pull back. Now, the reason you'll see this dotted line here is that this is a large spread on this particular pair, but that's basically where I'll be looking to enter when we get a pullback and then the market starts to break above that pullback. Looking at another one that didn't play out was the Swiss franc versus the Japanese yen here. I'll explain why that didn't become a trade. Looking at the fat man here, we had the Swiss franc heading south, same currency obviously as we were looking at just then against the Kiwi, and we had this Japanese yen here moving steeply north. So that fits the criteria for the FX trend rider strategy. We have 2 lines heading steeply in opposite directions. But this is where you have to have your volume price analysis indicators to tell you what to do, because when we look at the chart, this was the Swiss franc sinking against the yen there. That's what we're looking for, but the pullback here was too great, to the point where the trend dots, in fact this trend dot here, and this is the key, was lower than the trend dot 2 bars before it, 2 candles before it, if you can see there. So that essentially was too much of a pullback. What you're looking for with the trend rider strategy, as you'll see when we come to the Kiwi versus the US dollar here, you're looking for the dots not to have sunken too low. You still need to be in a general uptrend. You don't want it to have turned round. So if you can see here, there's a green dot, but that's still in parallel with the green dot 2 candles prior. It hasn't actually come below. The market's not sunken back too much. So once you get this pullback, you enter the trade here. So I'll just show you that there on the fat man. This is a trade I've entered. So this is the one I call one of the 4 that I called out towards the end of the trading room. We had the Kiwi heading north here, as I've just mentioned, against the Swiss franc, but we also had the US dollar, which is the light blue line, heading south sharply here. So we simply wait for this to happen. This is the Kiwi heading sharply, then we wait for a pullback, and we simply enter the market once the market enters above that high there. Alright, and that keeps us in that trend with the Kiwi versus the US dollar. So far 2 decent trend rider trades there, the Kiwi versus the Swiss franc, and also the Kiwi versus the US dollar, but we also had a Swiss franc versus the yen that didn't actually give us an entry signal because the market had actually pulled back too far. So there's a bit of discretion in this strategy. The other trade that didn't play out was the euro versus the British pound here. This was a short, and similarly, as you can see here, we got the pullback we wanted here, but it went too far. In fact, the pullback was such that the market completely reversed. If we look at the fat man here, we can see that at this point in time, this is when I was in the trading room here, the orange line here, which is the British pound, that's heading sharply north, and the euro is coming down sharply south. So that suggests a euro British pound short on the trend rider strategy, and sure enough, this is where it started to sink. But with the trend rider strategy, waiting for a pullback to the dots here, and then we're waiting for the market to sink below this low here. So that basically is the confirmation of the trend. It didn't happen, so we didn't get in the trade. Alright, so of the 4 trades that I mentioned towards the end of the room, 2 have got entries. That's the Kiwi Swiss franc and the Kiwi dollar. So if you want to find out more about the trend rider and the trend catcher strategy, then please feel free to come into my trading room. Just put your name and email address into my form, and you'll get an email from me telling you with a link to all the trading rooms, forthcoming ones anyway. So thanks for listening, and hopefully see you in the trading room soon. Bye bye now.